So another weekend, let's do another wrap up of how things panned out with our CycleEdge report and market timing. As usual, I'll go gold and we'll see how things panned out with everything else. But overall, this will give you an idea. So what did we have? As you know, with gold, we had a startup from last week. And then we said this week we're heading into Tuesday. And on Tuesday, markets start to turn around. And then we have Friday. So Tuesday, we're looking for tops where the market should start to look for reversal. And while we're looking at that, we're also keeping an eye out for all the days. So here's your Tuesday, high tension critical. And also we have a Wednesday high tension critical. So whenever there's a peak, we're looking to sell at the highs to kind of like pull back after that big impulse. Thursday was just a routine day, nothing to worry about. And Friday was also a trade day. So when the market came down, Friday was good to get back in. All right. And also we had some macro events. So Tuesday and Wednesday heading into Friday. And then Friday is again a reversal day. So if we're down, we want to buy. If we're high, we want to sell. So let's take a look. Now, remember, we started this from the previous week. Market goes up into Tuesday and Wednesday, as you can see. And then market shifts down into Friday. And here we are on Friday buying there as well. All right, so it didn't quite go down all the way into these levels. Came quite close to the TSM. But overall, that was the level. And this zone, as you know, was our target zone. So once the market got in there, looking for sells were okay. And this was the IDT template that I was using. By the way, all the software are done. I'll do a video on them as well. So this is how the timings pan out. So on Monday, right? This is Monday, as you can see. There's nothing to talk about. It was not a trade day, market going sideways. Tuesday, yep, we're looking for highs. Trade hour in Asia, market pulling down. Retracement, selling off again. Wednesday, same thing. Coming up here at trade hours, selling off. Thursday, same thing at trade hours. Let me just open this up a little bit so you can see better. As you can see on all of those days, Tuesday, Wednesday again, this is New York time. The vertical lines are the trade hours. Remember, the trade hours are with the CycleEdge report. Also, as you know, let's check it out. So these were the hours. Once you take a screenshot, you can actually check these out because these are general trade hours for whatever you're trading. If the time matches your price, it's the time of the day at that right price that you want to get in. So that's your Monday. Take a screenshot, check it against whatever you're trading. That's your Tuesday, Wednesday, Thursday, Friday. No video on Fridays. You know, I work only Monday to Friday. And we already have the rest of the August months here. And current CycleEdge reports, as you know, are all in here for the whole month of August. Okay. So let's do that. So that's basically it. Okay, so we had the trade hours as well on Tuesday, Wednesday, Thursday, Monday as well. It's like for every day, as you can see here, right? So it was telling us the alert windows, what to expect during the time of the day, and also specific hours, plus the specific hours for the general day. So when you kind of bring them all together, you have the timing at the right day. So as you can see, Monday was a bit of a drain day. It was going just sideways. Tuesday, high tension critical. So we're expecting a peak day, maximum resonance. Also, that was true for Wednesday, as you know. So peak means there's a lot of volatility happening. As you can see, there's a strong follow through. It's giving us some nice comments here. And all I have to do is just You know, if I'm at the tops, I want to be looking for a reversal. Same for Tuesday, same for Wednesday, all week. From the tops going into Friday, and here as well, Wednesday, peak day volatility with comments and when to enter. And those hours are basically just here. Whenever you have a sell-off, time, price, sell-off, again, time, price, sell-off, and then, as you can see, 1, 2, 3 legs down. Friday's a trade day, and between 8 and 9, that's your 8 and 9, you got your trade days, right? Trade day, trade hour. If you take a look at Friday, 8, 9 a.m. my time, which is the server time here, going into London, breaking out exactly at the trade hour, as you can see. This is nice to kind of like see, right? Markets moving up from trade hours from the lows, right? These price levels were like given earlier on. So market comes in just going up. This is London. London also just going up. Trading hour coming to a target. End of story. And that's basically it. So all you have to do is just follow through and it's all good. Whatever you want to check, we can check as well. You know, let's check. Let's do euro dollar. Same kind of thing. Let's see what CycleEdge gave us with the euro dollar. With the euro dollar, let's see. We should be up here somewhere. By the way, I've also really simplified the CycleEdge report. I'll do a video on that as well. So the indicators are done. CycleEdge report is just really refined. So let's take a look. What did we have? Let's go to the weekly first, weekly insight. And that will give us initially what we're looking for. So weekly insight told us Monday and Friday. So let's take a look. Macro events on Sunday. Sunday, obviously, market's closed, but I want to know that because it influences Monday. So I've got Monday, Tuesday going into Friday. Let's take a look. Euro dollar. That's your Friday. Market down, so going up's good. And then that's your Thursday, Wednesday, Tuesday, Monday. Nice and easy. All right, Monday going into Friday, Friday buying. Okay. Same with this. This is the intraday template. This is the short time frame. Here we are. All you have to do is just stick the hours in, like I showed you in the general trade hours, and see how that panned out for you. Also with the euro dollar as well. We had Wednesday, as you can see, Tuesday. So we had Monday, Tuesday. From the peaks. So, whoops. Monday from the peaks going into Friday, and Friday being a trade day, market taking off again. All right, so that's all fine. That's all good. Right on the TSM price level. Right on there. You see, the market sells off. The beautiful thing is, look, you can follow this really nicely. If you're following it to a target with TSM, you're going to sell on the line, right? Once you start selling on lines and buying on targets and buying on lines at trade days, you're going to find your trading much more simplified, simply because you know the trading days, trading hours. For example, let's take a look at this 15-minute chart, right? Let's also bring up the hours for Friday. So if I know on Friday we've got trade hours, we've got a swing day The market's down, so I want to follow it to the upside. All I have to do is just put the hours. So I've got 8 to 9, 2 o'clock, 4:20. And I said here, expect volatility. And if there is clear direction, it should go to closing. So if you got clear direction and it should go to closing and you got the hours, then, you know, that's it. So 8 o'clock, where's 8 o'clock? Let's do this. This is 8 o'clock, right? So market, between 8 and 9, you see we're breaking above that weekly opening range price. That's your 8 to 9. Market going up. Then I've got 240, which should be just about there. 240 is on that bar, so that's already gone to the upside. Again, breaking out. And then I've got 420. That's your 415. So 420 is here. Anybody who bought here would still be okay. It is Friday, right? Market going up right in there. And also, let's take a look at the euro dollar. Let's see what it told me on Friday, because I want to bring these things together, right? What do I have? A trap-like reversal. Look, this is good to know. From 150 to 455, trap-like reversal. 455 to 835, trap-like reversal. So let's take a look. 150 to 455. So where is 150? This is 150, guys. So trap-like reversal, 150. Going into 455, well, look, this is 455. Right there. And then what did it say? It said, well, from 455 to 835, I've got a trap-like reversal again. That's your 455. Guys, this is your 835, where the buck stops. That is the accuracy that you are getting. All right, so hope this is all making sense. If you watch my previous videos, it should make sense, because what are we having here? You know, essentially, what do we have? We have trade days that we know in advance. So from last week, you get these low dates and the high dates where to go to. So all of the trading days we know in advance, and the hours for the day we know in advance. You can just mark them in. If it matches your style of trading, whatever your technical analysis setup is, because technical analysis, you can do whatever you like, whatever turns you on, demand and supply, price action, pump and dump, whatever, swing trading, intraday trading, scalping, you can do whatever you like. With your technical analysis, bring together the CycleEdge report. It is the only report on the planet that will tell you that there's a momentum push between 2 a.m. and 6 p.m. This is your 2 a.m. and this is your 6 p.m. Momentum push. And then we've got the trade hour breaking out. Isn't it funny? It's like breaking out in that time period. It's going above the weekly opening range and then just going back up. It's just crazy. You can do this for anything. Let's take a look at Bitcoin. Same thing. Look for the trade swing days and then check out the hours, match it to your technical analysis, and that's it. So for Bitcoin, we add Monday, Tuesday, going into Thursday. So let's take a look. Monday, the 10th and the 11th, going into Thursday. Well, that was it. Monday, Tuesday, going into Thursday. Obviously, it came all the way into Friday, but that's fine. Even if you sold all the way into Thursday, I don't think anybody's going to complain. Look where the market is buying, right on the line. Right on the line means there's a price to it. Look, let's do this. Let's get rid of that. 38 has a price of 62,944. Today, that's where you should have bought. 62, 904, was it? Let me just check. 38, 62, 944. 62, 944 is just there. Right, so it's a bit tight, but it's just around here. Okay, that's your price. Obviously, there's no hours for the Saturday, but it's just demonstrating for you what's going on with the pricing, because it just calculates really good pricing. With the weekly as well, you see how we sold right on the line. That's the line. It's 42, 65, 654. The highest it was 65, 462. With Bitcoin, that's quite close. So as you can see, we're like very tight and close on pricing, and you know, wherever they sell from, once they do it, that's it. And this is a beautiful setup, going all the way in there. So we can get rid of these now because we're going to have a new week. And that's it with the indices. Let's take a look at the indices. SP 500. Let's see. With the SP 500, let's get into the 27s. No, not that one. Not that one. It is that one. So we had Monday, 10th of August, and Thursday. Now, Thursday is a stronger day because that's first. They both have 3 stars, okay? But whichever is first, that's the stronger one. So let's take a look at Monday and Thursday. SP 500. Guys, check it out. I did say this could actually break out as well, but that is your Monday. That's your Monday. Okay, Monday, Tuesday, Wednesday. I did say Thursday is a stronger day. Whichever CycleEdge says, that's your stronger day, right? So it could have said Monday, Thursday, but no, it said Thursday, Monday. So that is your day, okay? Expect a market turn or a shift at either boundary, okay? So a shift in the market, as you can see, breakout, and that's it, like going to the target, and Friday cooling off a little bit. Whatever you want to analyze, we can also do. This is Dow Jones, because we can analyze any asset. So if there's something you're trading that's custom, I don't know, like a stock or whatever, we can do that as well. Now look, with Dow Jones, we've got Monday, Tuesday, and Wednesday. Right? When you have a series of days, in fact, Thursday here as well, right? When you have like a bunch of days in a week, first of all, understand that that week is important. Second of all, indices go together more often than not. So you want to be checking SP 500 and NASDAQ dates against these. And we've got Monday and then Tuesday, Wednesday, plus Thursday, as you can see here. So it's quite full on. Now this is Dow Jones. Let's get into Dow Jones. change from SP 500 to Dow Jones. So we're going to have that Monday, and then let's see how things are turning. All right, so Friday, Thursday, Wednesday, Tuesday, Monday. So Monday's an inside day, nothing happened. And then we've got Tuesday and Wednesday. So that was the strongest day that it gave us, but nothing happened. It was an inside day, so nothing to do there. Tuesday, Wednesday, Tuesday, Wednesday, Tuesday, Wednesday market just down a little bit. Thursday gave us nothing really happening, as you can see. What would have been good on those days? Well, if it matched your price. If it doesn't match your price, obviously you're not going to trade. Sometimes I get this question. In fact, I get it often. Well, on that day, nothing happened. You have to match your technical analysis to that trade day. If they correlate, you have a trade. If they don't correlate, you don't trade just because it's a day. Okay? Otherwise, you'll be running around just hunting the days when the market's going to turn or break out. That's not the way to trade. So what would you be doing? So you'd be saying to yourself, well, what would I be doing if I was at a support on Thursday down here and it's a trade day? I buy on the price. If I was up here at the resistance targets, I would sell, look for a sell position. But if I'm in the middle of nowhere where I have no setup, it's not in any of my price zones, there's nothing to do. Same here, for example, right? We have a gap here. It's not filled in. This is just a pure gap, right? So this opening, like this breaking out and pulling back, hasn't even closed the gap here or there, as you can see. So there's no real setup here. If the market comes back down, closes this zone, or let's say it came back to one of our setups, right, like 37.5, and it was a trading day, and then you look at the price and you just buy on the price, and that's it. You can also check the intraday trade hours. Yeah, no problem. But if I'm down, if I'm at a decent level, like 37.5, so one of my favorite, and then I have a price at that day, I'm going in. I'm not really going to be thinking too much, because we've got a date and a time. So make sure you look for everything, and it's not just, it's a trade day today, so we've got to turn around. No, it's got to be a trade day and your price. And if there are too many dates on there, like with Dow Jones, say, well, leave this alone. It's just obviously, not clean. Here is NASDAQ. Let's take a look. Let's see what NASDAQ gave us. Okay, somewhere around there. So NASDAQ trade days, what was it? Monday, Tuesday. So Monday, Tuesday, Wednesday, and I'm pretty sure that's it. Monday, Tuesday, Wednesday. So let's take a look. What happened? This is Monday, Tuesday, Wednesday. All right. So look. That's your Tuesday. That's your Wednesday from the lows. Okay. And Monday from the highs. Monday. All right. So that's your Monday. Monday coming down to Tuesday, Wednesday breaking out. How to match that? Well, how to figure that out? Well, look. Why don't you check your pricing? If the market is coming down into a swing day, what's your price? Where's your price line? If you've got a price line, if it's close there, matches your hours, go for it. Where's your resistance? That's your resistance. Where's your target? Those are your lines. They all have a price. All of the lines here, including these dotted lines, they all have a price. So if you break out, you know where you're going. you know where to take profit. If it comes back, you know where to buy again. And then you can match that to your intraday trading hours as well. But remember, you want to make sure you're matching your trade day to a setup. If you don't have a setup, if you don't know what's going on, then you sit and you wait. Okay, because if it doesn't match a setup, you do not force a trade. That's just silly. Okay, so that's that. That's the weekly wrap up. Okay, but you can see, with the new setups that we have, the technical indicators as well. Everything is like, the pricing is very unique. The pricing is all, and the setups are all good. So if the market is going sideways, selling the highs at trade hours. So for example, if the market's up here, let's see what time that was. What did I have for a Friday trade hour? 4:20 in New York. Guys, 4:20 in New York is there. That's your 4:20 in New York. They sold here before. They stop sweep. Look, this is a stop sweep setup. Market pumped, coiling dumped. That's it. Intraday trade. This is the intraday setup, by the way. IDT. And that's it. Matches your time, matches the price, sell it off. Really tight risk. A lot of people with this pump, coil and dump business, they will wait for the market to break levels and then get in. That for me is, okay, but why not enter at the tops if you know the hours? This is where the market sold before. It's a pump, coil, dump. It's obvious. And, it's just common sense if you got the trading hours. And I'm pretty sure NASDAQ's CycleEdge report would have gave you a heads up on Friday and said something about it. Look, 425 to 455 to 835, trap-like reversal. Who the hell gives you that on the 24th of July, pretty much like 3 weeks in advance? This is your 455. That's your trade hour. This is your 455, guys. And this is your 830. Where's your 830? There. I mean, who gives you that information from 3 weeks ago? It's like a joke. It really is. Anyway, have a good weekend.